Good day, Junior Techies. I'm Mrs. Brimacombe. We're going to look at Activity 3. Statement of Financial Position and GARP. It is very important that you study your GARP principles. You will need to be able to apply them. Question 3.1. Match the concepts in column A with the examples in column B. Write only the letters A to E next to the question number in the answer book. Historical cost. Historical cost means we need to show it at the original price. This will be number E. Land and buildings are shown in the balance sheet at 800,000, even though an estate agent says that the properties could be sold for 900,000. Consistency means that we need to be consistent. This will be number D. The business uses the same depreciation rate from one financial year to another. We cannot decide this year we're going to calculate it at 10% and next year we're somewhere going to make it 12%. We need to be consistent. Prudent means conservative. This will go with number B. Provision for bad debts must be taken into account to indicate a conservative figure for trade debtors in the financial records. If, for example, our debtors is 100,000, we would love to say all that money is going to come in, but the reality is that some debtors will not meet their commitments. So we need to be conservative and make provision that we will have some debtors or some debt that will need to be written off as bad debts. Business entity. The owner's personal finances must be kept separate from the business. This will be number C. The owner of a business wins 8,000 in a competition. This is not shown in the income statement of the business because it is own personal winnings. Going concern. Will the business continue in the foreseeable future? So number A, that will go with number A. Assets are recorded in the balance sheet with the assumption that the entity will continue to operate in the foreseeable future. Question 3.2, Financial Statements. You are provided with information relating to Perfect Garden for the financial year ended 28 February 2022. The partners are Pam Smith and Jordan Blue. The business applies a markup of 60% on cost. Question 1. Calculate the correct net profit for the year ended 28 February 2022. Indicate a plus for increase and a minus for a decrease. Complete the following notes to the statement of financial position, the current account for Jordan, trade and other payables, and complete only the asset section in the statement of financial position on 28 February 2022. So take note how the financial statements can be asked in different ways. Calculating the correct net profit is a question that learners often battle with. Majority of the time, they get the amount correct, but they incorrectly show, should it be plus or should it be minus? Information number 1, amounts extracted from the records on 28 February 2022. Information 2, adjustments and additional information. So A, the net profit was calculated at 821,771 before the following adjustments were taken into account. Then B, the partnership agreement makes provision for the following. Now your steps in completing this. Start with the amounts extracted from the records on 28 February 2022 and show where it's supposed to go or indicate where it's supposed to go. That's the easy marks to get. Then step number 2, complete the adjustments. Once you've completed the adjustments, then you can finish off the statement of financial position and your notes. our approach in this video is going to be slightly different. We are going to focus on each question at a time. Question 3.2.1, calculate the correct net profit for the year ended 28 February 2022. Indicate a plus for increase and a minus for decrease. Now they provided to you on the answer booklet, they provided the incorrect net profit which was calculated. Now when you get this type of question, we do not care about what was our total income, our total expense for this accounting period. We are going to show the adjustment figure in here, and you need to indicate, should that be plus or should it be minus? That's the part where learners get it often wrong. Now, if you look at your T account, all income and expenses has an effect on the net profit. This was now calculated incorrectly. If we look at our income, if our income increases, it will have a positive effect. But if our income decreases, it will have a negative effect. If we're looking at our expenses, if our expense increase, it will have a negative effect on the net profit. If our expense decrease, it will have a positive effect on the net profit. So draw this on your answer booklet and make sure that you get it 100% correct. Should it be plus or should it be minus? Adjustment number 1. A physical stock count at the end of the financial year revealed the following. Cleaning materials left over 3,250. Partner Pam returned goods with a selling price of 2,400 for personal use. This was not recorded at all. As per physical stock take, the business had 469,000 worth of trading stock left over. Starting now with the cleaning materials left over. Whatever is left over must be subtracted from our expense account, and that will be taken to consumables on hand. Reminder, they've asked you to complete the asset section of the statement of financial position, so that consumables on hand will be added to the inventories. But focusing on this question now, whatever is left over is subtracted from our expense account, which means that if our expense decrease, if it's credited, it will have a negative effect. It will have a positive effect on the incorrect net profit which was calculated. Now the partner returned trading stock, which means that our trading stock will increase and the drawings will be credited, which will be minus. Now why is this relevant to the incorrect net profit which was calculated? Because as per physical stock take, the business had 469,000 worth of trading stock left over, which means that the trading stock deficit or surplus was not calculated yet. And we need to make sure that we use the new updated balance of the trading stock. The physical stock count balance must be compared to the new updated balance. This is why it's relevant. It's important to take note. It was worth a selling price of 2,400. The owner will always take trading stock at cost. So that's the first important step to remember, is that you need to calculate the cost by using the selling price times 100 divided by 160. The markup percentage was 60% on cost. Refer to the instructions in the information right in the beginning. 469,000 as per physical stock take, minus 1,500 minus 460,000 means that there's a surplus of 7,500. Trading stock surplus is an income which will be credited, which means that will have a positive effect on the incorrect net profit which was calculated. Completing this now on your answer booklet, Make sure that you indicate trading stock surplus 7,500 and show your calculations how you got to the answer. Consumable stores 3,250. Again, both of them does have a positive effect. That's why no brackets. In accounting, if there's just the amount written there, that is a positive amount. If it's in brackets, that means a negative amount. Adjustment number 2, no entry was made for 1,470 received from the insolvent estate of a debtor. This represented 35% of the outstanding debt. The balance must be written off as bad debts. Your outstanding debt is equal to 100%. The amount received represented 35% of the outstanding debt, which means the bad debts that must be written off will then be 100 minus 35 equals 65%. No entry was made, which means that the amount received must be indicated in bank and debtors control. The amount written off must be indicated in bad debts and debtors control. If your bank has a favorable bank balance, it will form part of your cash and cash equivalents, and that's the section that we needed to complete in the last question. Debtors control forms part of your trade and other receivables. Keep that in mind. To find out the amount that should be written off as bad debts, we need to take the amount received times 65 divided by 35. That is the amount which should be written off. Be careful with this calculation. We often make a mistake by just saying 1,470 times 65 divided by 100. That 1,470 represents the amount which was received. Your bad debts will be debited, which means your expense will increase. If your expense increase, it will have a negative effect on the net profit. Make sure that you show your calculation in brackets. Reminder, in accounting, a bracket here means a negative amount. Provision for bad debts was calculated correctly. However, provision for bad debts for adjustment for 480 was recorded as an income instead of an expense to the business. So what is happening here is that the provision for bad debts has been calculated, but it was done incorrectly. So we need to make a correction. If it was recorded as an income, it means it would have been closed off to the profit and loss account on the credit side. To correct this, we need to take it out, but to take it out, we're only going to cancel that entry. But we still need to show the provision for bad debts adjustment, which was an expense. The correction, we have to debit the profit and loss account, but it will be times 2, and that will have a negative effect on the net profit. Provision for bad debts adjustment, negative effect, so it must be in brackets or indicate a minus. If you don't indicate a minus or a bracket, it means it's a positive amount, and then you're going to get that wrong. Rent expense includes the rent up to 31 May 2022. The premises was only rented from the 1st of January 2022, with total rent paid 30,750. Our accounting period ends 28 February 2022. Very important. The rent includes the rent up to 31 May, so anything outside of that period must be taken out, but the premises was only rented out from the 1st of January. Our calculation, 30,750 times 3 months must be taken out of 5 months. So the amount, 18,450. So we've paid the rent in advance. Our rent expense will be credited, account debited, prepaid expense, which forms part of your trade and other receivables. Keep that in mind for the statement of financial position, where we only need to complete the asset section. Because our expense decrease, this will have a positive effect on the incorrect net profit which was calculated. So on my answer booklet, make sure that you show your calculation. It's times 3 divided by 5. Because it has a positive effect, no brackets, indicate a plus. Paid 16,800 for new printers, 14,000, and printing paper, 2,800. The entire amount was debited to equipment by mistake, in error, which means we need to correct the equipment account. Because the new printers is part of my equipment, but the printing paper will form part of my stationery. Equipment is regarded as an asset, so the addition was 14,000, which should be included as part of my equipment. But the printing paper was incorrectly debited to equipment, which means we need to take that out so that stationery can be debited. If stationery is debited, our expense will increase. If our expense increase, it will have a negative effect on the net profit, which was calculated incorrectly. Next adjustment. An employee was left out of the salaries journal for February 2022. Details are as follow. So left out means it was omitted. We still need to add it. When we're completing the net profit section, this question, we only care about the contributions plus the gross salary. Any deductions will go to the fund account, which forms part of your trade and other payables, and they've asked you to complete the trade and other payables. If we look now at the information, the gross salary is a question mark and the net salary is a question mark. But they provided the pay as you earn, the medical aid fund, and the UIF. Note, the business contributes 14% of the gross salary to the medical aid fund and 1% to the UIF. To find the gross salary, we can use the UIF. 1% is deducted and 1% is contributed. Remember that. So to find the gross salary, we're going to say 220 times 100 divided by 1. That means my gross salary was 22,000. Make sure that you show your calculation in brackets. If my salary is an expense which is debited, it will increase. It means that will have a negative effect on the net profit. The business contributes 14% of the gross salary to the medical aid fund. This means that I've calculated now the gross salary. We can take that times 14%, and that will be the medical aid contribution. It's an expense to the business, which means it will have a negative effect on the net profit. Do not forget about the UIF contribution. The contribution is also an expense to the business. If our expense increase, it will have a negative effect on the net profit, so it must be indicated in brackets. The interest on the fixed deposit for February 2022 has not yet been received. 45% of the fixed deposit will mature during August 2022. The interest is not capitalized. This means that interest is outstanding for 1 month. The total fixed deposit amount is 250,000 and interest is calculated at 9% per annum. 1 month is still outstanding. That's the first part which I need to calculate. 250,000 times 9% times 1 divided by 12. Interest on fixed deposit will be credited because this is an income. If it's credited, it's positive. It will have a positive effect on your net profit. Now, because interest is not capitalized, it means that accrued income is going to be debited. This forms part of your trade and other receivables, which forms part of the assets section in your statement of financial position. That 45% of the fixed deposit which will mature does not form part of calculating the correct net profit. That will appear in your statement of financial position. Whatever will mature within the next 12 months must be taken out of your non-current assets and shown as part of your current assets in cash and cash equivalents. The total commission received was 76,500. This included the commission for March and April, which is 2 months outside of our accounting period. Note, the commission received per month increased by 13% from the 1st of July 2021. This means that I need to now look at my accounting period. I cannot just take the 76,500 and divide it by 14. Why 14? 2 months was received in advance. The reason for that, from the 1st of July, the commission received increased with 13%. So there's different methods in how we can get to exactly the same answer. Method number 1, for 4 months it was at 100%. For 10 months it was at 113%. I want to know what is the total amount that should be taken out after the 13% increase, and 2 months must be taken out. So 113 plus 113 equals 226. So we're going to take 76,500 times 226 divided by 1,550, and that equals the amount that we've received in advance. Method number 2, for 4 months it was at an X amount, and for 10 months it was at X times 113 divided by 100. When you're using X, it will provide you with the figure before the increase. Then we still need to work out the amount after the increase, and then we need to times that by 2, because 2 months was received in advance. If it was received in advance, it means commission income should be debited with 11,300 and income received in advance will be credited. That is a current liability. It forms part of your trade and other payables. If my income is debited minus, it means it will have a negative effect on the net profit. Make sure that you indicate your calculation in brackets and also indicate that will have a negative effect on that net profit. Depreciation for the year amounted to 114,256. Depreciation is an expense to the business which should be added to accumulated depreciation. Because it's an expense, it will have a negative effect on the net profit. Now we've looked at all the adjustments. We now have to take the incorrect net profit and plus minus everything that we have done. Question 3.2.2. Notes to the statement of financial position. We have to complete the current account for Jordan only and the trade and other payables. Salaries. Pam is entitled to a monthly salary of 25,000. Jordan receives 2% more than Pam's allowance, which means we need to take 25,000 times 102 divided by 100 because he's receiving 2% more. But now, very important, they said specifically monthly salary. This needs to be shown as the salary per annum, what the partner is entitled to. That's why we need to times that by 12 to get the partner's salary allowance for 12 months. Interest on capital is provided at 12% per annum on the capital balances. Capital Jordan is 500,000, but now Jordan increased his capital on the 1st of January 2022 by contributing a vehicle with a cost of 200,000. This has not yet been recorded. This is very important to understand because interest must be calculated on the capital balances. But now there was movement during this accounting period. So I cannot just take the 500,000 and calculate 12% per annum on that. An additional vehicle was contributed with a cost of 200,000. This has not yet been recorded. It means that that balance of 500,000 is the balance in the beginning of my accounting period. So our first step is to calculate 500,000 times 12% times 10 months. That equals 50,000. Plus 200,000 equals new capital balance 700,000. So 700,000 times 12% times 2 over 12 means 14,000. So the total interest on capital is 64,000. Both partners are entitled to a bonus equivalent to their monthly salary. We've calculated the monthly salary is 25,500. So now we've looked at the primary distributions of profits, what the partners are entitled to. To calculate the total primary distribution, we have to add the partner's salary plus interest on capital plus partner's bonus. Profit or losses are shared in the ratio of capital balances. The change in capital was not considered for the current financial year. Pam's share of the remaining losses is 42,500. So if the change, the additional 200,000 which was contributed is not considered, and we look at the capital balances of Pam and Jordan, both at a capital balance of 500,000. This means that the ratio is 1:1. It will be equally shared. They provided the share of the remaining losses is 42,500. They specifically said it's a loss, so it must be shown in brackets. To get the profit per income statement, take your primary distributions of profits minus the final distribution of profit. That equals my profit per income statement. Drawings for the year. Remember, it was partner Pam who returned trading stock. Jordan, there were no change, so my drawings is in brackets 405,000. Retained income for the year, profit per income statement minus drawings equals the retained income for the year. Retained income at the beginning of the year, they specifically said current account Jordan on the 1st of March 2021 credit 120,000. Credit means no brackets. Now we can calculate the retained income at the end. Retained income for the year minus 52,000 plus 120,000 equals 68,000. To complete the trade and other payables, we need to start with the list of balances which was given. Creditors control is a current liability which forms part of my trade and other payables. So we write the amount in brackets. Then we had the adjustment. An employee was left out of the salaries journal. A reminder, the gross salary plus the contributions appears always in the income statement, which means that we needed now to add it to calculating the correct net profit because it was omitted. But now, to show the deductions, this must go to your trade and other payables. But do not forget, the business contributes towards the medical aid, towards the UIF. That must also be included in your trade and other payables. We often forget to include the contributions in here. So starting with the SARS pay as you earn, it was provided to you, 3,960. The medical aid fund, 1,540 is deducted. We calculated 14% on the gross salary. So the medical aid fund consists out of the deduction plus the contribution. That is the total amount that we owe the medical aid fund. UIF consists out of the deduction plus the contribution. So in total, 440 is owed to the UIF. Do not forget about the net salary, creditors for salaries. To get the net salary, you have to take your gross minus deductions, which will be your pay as you earn, medical aid, and the UIF. And that is the amount which is owed to my employee. The commission, which was received in advance, make sure that you take your answer which you've calculated in the previous question and you transfer that same amount to income received in advance, which forms part of your trade and other payables. The loan amount will be reduced by 45,000 in the next financial year. Whatever is paid in the next accounting period means it needs to be taken out of your non-current and shown as part of your current. Now in this case with the loan, it can either appear on the face of the balance sheet or in trade and other payables. They have not asked us to complete the equity and liability section of the statement of financial position. So this must appear as part of your trade and other payables capital portion of loan, 45,000. There were no adjustment with regards to the creditors control, so now we can total the total for trade and other payables. The last question, complete only the asset section in the statement of financial position on 28 February 2022. When I started this, I said to you, step number 1, show the amount where it's supposed to go from the list of balances which was given. We are approaching it a little bit differently in this video. So we're starting now with trading stock, 460,000. The trading stock, we had the balance in the beginning. The owner returned trading stock, which was taken for personal use, and we calculated a trading stock surplus of 7,500. So when completing this, we're going to show inventories, 460,000 plus 7,500 plus 1,500. Now remember, your physical stock count, unless they tell you after the physical stock take was done, there was adjustments. Then only am I going to adjust that amount. Otherwise, that should be the amount which will appear in your inventories. We had consumables on hand, cleaning materials, which was left over, 3,250. This forms part of your inventories, so it should be added. No entry was made, 1,470 received from an insolvent debtor. This represented the 35% of outstanding debt. The balance must be written off. We start with debtors control. We have a balance of 210,000 in the beginning. The business received 1,470 from the debtor. Therefore, debtors control is credited and the balance would be written off as bad debt. So debtors control must be minus 1,470 minus 2,730. Bank, they didn't say it's an unfavorable bank balance or bank overdraft, then this is regarded as an asset. We start with the balance brought down and 1,470 must be added to it. So in trade and other receivables, make sure that you show your calculation. 210,000 minus the amount received minus the bad debts. In my cash and cash equivalents, we start with the balance, 42,500 plus the amount that we've received. Provision for bad debts must be subtracted from your trade debtors, so this must go to your trade and other receivables minus 2,600. Please remember, it was the provision for bad debts adjustment, which was incorrectly recorded as an income instead of the expense. That has nothing to do with this balance of 12,600. Rent expense include the rent up to 31 May 2022, which means rent was paid in advance. This forms part of your prepaid expense, which forms part of trade and other receivables. It is so important that you understand your formats, that you take all of these to the correct places and show your calculations in brackets. Paid 16,800 for new printers and printing paper, but 2,800 was incorrectly debited to equipment. This means we need to adjust the fixed assets or tangible assets. The fixed assets at carrying value was 1.6 million. Equipment would be credited with 2,800, which means that we need to minus 2,800 from that. Depreciation for the year amounted to 114,256. This will decrease your tangible or fixed assets minus 114,256. Jordan increased its capital on 1 January 2022 by contributing a vehicle with a cost of 200,000. This has not yet been recorded, which means vehicles will be debited plus 200,000 to our fixed assets. Now we can calculate our total non-current assets with regards to our tangible assets and fixed assets. Your non-current assets consist out of tangible or fixed assets and your fixed deposit. So this must be our next entry, fixed deposit. Make sure you show the name of the bank. It's 250,000. Now, interest is not capitalized, which means it's not added to the fixed deposit. 1 month was still outstanding. Accrued income forms part of your trade and other receivables. So, plus 1,875. 45% of the fixed deposit will mature in the next 12 months, because August 2022 is in the next 12 months. Whatever will mature must be taken out of your non-current and shown as part of your cash and cash equivalents. 250,000 times 45% means minus 112,500, and that will be added to the cash and cash equivalents. So the total for our fixed deposit is 137,500. Our next step, now we can calculate our total non-current assets, which consist out of fixed deposit plus tangible assets. Then we had the savings account, 40,000. Savings account forms part of your cash and cash equivalents, so plus 40,000. Now we can total the total cash and cash equivalents. Once we've got the cash and cash equivalents plus trade and other receivables plus inventories, we can calculate the current assets. Current assets plus non-current assets equals my total assets. A reminder, these are your steps when you need to follow when you're completing these type of questions. Our approach in this video were a little bit different, where we only focused on each question at a time. Take note, when I completed 3.2.3, I had to go back and look at the adjustments. And this is what's happening in a test and exam when you're only focusing at one question at a time. Then you need to go back and look at the adjustments to see which of those will appear in here. And that is just time wasting, and your mind might end up leaving something out. Thank you very much. Next, we're going to look at activity 4. Push yourself because no one else is going to do it for you. Have a wonderful day.